Hey guys, this is Rudy for Best Investor coming at you from West Palm Beach in Florida today. It is Tuesday. It is June the 22nd. On the Occidental Petroleum front, there's not a lot going on, so I guess no news is good news. I know I have not caught up with all the comments that you guys have made on our channel, chatting about the stocks that we are interested in, whatever that may be. And of course, many times it also is Occidental, in addition to the fact that most often it's about energy stocks. Today, we're going to do something a little bit differently or different. What I wanted to do is show you some of the communication that I received from a different source. So let me share this presentation here with you. I put a few slides together. And what we're going to talk about today is Whirlpool. And I'm sure most of you or many of you will be familiar with Whirlpool. And the other one we're going to talk about is Ternium. WHR is the ticker symbol versus TX, which kind of reminds me of Texas. Would you invest in these? Neither or both? Are you going to run away, stay away from them? I'd like to hear what your thesis is, because as usual, you guys are the smart guys and I'm just reporting. So you can let me know as we go along. So where does this come from? So on my Twitter channel, by the way, you probably shouldn't follow me on Twitter, especially if you're very sensitive about things that are supportive of government, because I'm not a great government supporter myself. I dislike most politicians. I don't dislike even analysts as much as what I dislike politicians. So Twitter is the place where I go to rant about things. When the government says the sky is blue, I guarantee you it's raining. If the government says it's raining, I guarantee you it's a blue sky. So I don't trust them as far as I can throw them, and I'm not that strong and I can't throw them a long way. So I just don't trust them. I don't trust politicians at all. Stay away from me on Twitter, because that's where I vent, and I vent about all kinds of stuff. If the government says we're all going to get COVID and die, I think COVID is a scam. If they say you must all get vaccinated, I think the vaccine is a toxin. So I approach everything from the point of view of saying they're lying to us and something is wrong. And for that reason, the only place I can really vent is Twitter, because if I do it on YouTube, they'll just cancel my channel. So I got this message on my Twitter channel. So remember, I said stay away from Twitter. Don't follow me on Twitter. Kartik wrote me a note and talked a little bit about Oxy, and then he added, I wanted to ask if stocks like Whirlpool, WHR, and TX, Ternium, are stocks you could maybe take a look at and have your thesis. So I'm going to do that, Kartik. I'm actually going to look at both of these very briefly, and then you guys can tell me whether they're interesting or not, and whether you agree with Kartik's thesis that this kind of fits my general sort of investment thesis of undervalued stocks. And at the same time, maybe let Kartik know sort of what you think of these two particular equities. So I have my espresso, so if I'm talking too fast, it's probably because of the jungle juice. Whirlpool. I'm sure most of you are familiar with Whirlpool, especially if you live on Earth. You've probably heard of Whirlpool before, because Whirlpool makes a whole variety of different home appliances. I think in my house, I probably have 3 or 4 things that are Whirlpool. I know for sure. I have a fridge and a dishwasher, and maybe my stove is Whirlpool as well. Anyway, they all look alike. I'm not sure if they're all made by the same manufacturer. And anyway, I think most of you are familiar with Whirlpool, so I don't have to dwell on that. So let's take a quick look here at what's going on with Whirlpool. So in the first place, you got the stock trading on the New York Stock Exchange, currently at around $215. I don't know what it closed at today, because I wasn't really following it, and I'm not sure at what time I took the snapshot today. So today is June the 22nd. So during the day, sometime today, Whirlpool was at $215.78. I'm not going to go in depth on either one of these, but I do want to kind of touch on them, not just because Kartik said so, but also because they are interesting potentially for us from an investment thesis point of view. Its 52-week range shows you it's just right off center here, right? So we got a 52-week range of 120 to 150 something, and it's currently just over 200. So there's a little bit of run rate there if that is something that you generally look at to see whether it's time for you to get in or not. Some of the things that I look at is EPS. Obviously, and it's nice to see it at 21. The market cap of the company is 13.5 billion. It's not a small company by any chance. The PE fits my general investment thesis. I look for a PE ratio of 15 or less. Why? 15 is sort of the average of the S&P 500, and I don't want to buy averages. I want to buy cheap stocks. And the PE ratio is a quick snapshot view of whether the stock is expensive or cheap. And with a PE ratio of just under 10, Whirlpool right now looks kind of cheap. We have an annual dividend yield here of 2.6%, not too shabby. So for people who are looking for a company to invest in that's going to give them a bit of growth on the share price, and at the same time a little bit of a hedge on that annual dividend of $5.60 per share on an annualized basis, yielding 2.6%. Not too bad. You can see this sort of decline here on the graph. Around about the end of May, it had peaked up to that almost $257, $260 high before dropping down to where it is right now, $215. So a little bit of uptick there. I went to tip ranks, as I usually do, just to quickly get a snapshot of what my favorite schmanalists are saying about this. They rank it neutral. It's a 6. That means it's on the sort of positive side of the scale. And right here at the bottom, by now you would know that I'm a fundamentals guy, so I didn't follow the meme stocks at all and invest all my money into GameStop and AMC. I prefer to look at fundamentals and look for undervalued stocks. The fundamentals are pretty good. Return on equity 37.4% over the last 12 months. TTM, trading 12 months, and the asset growth about 5%. So not too shabby. So as a first pick, this one looks pretty good. I'm not sure I would necessarily jump in, and there's obviously more stuff I want to look at, but so far so good. I always look at the debt. Maybe that's just a byproduct of my pain that I suffered through Occidental. Remember the wall of debt, right? So Whirlpool has a debt to capital ratio, total capital ratio of 50, which is in line with the household durable industry norm. Given that the company's operating profits are 33.58 times, 33 times greater than its interest payments, there should be little difficulty in repaying debt. This to me is very important. It's important today for Occidental as well, but I think Occidental is in a good spot because of the enormous free cash flow that they can generate with WTI in the 70s. But Whirlpool, the quick ratio down here at the bottom in the blue circle, 0.92. It's close to 1. We want to see a quick ratio of 1 or greater than 1, not less than 1. So a little bit of work to be done there, but at the same time, the interest coverage for the most recent quarter at 33.5 is so good, it's so strong that as the little top description says, Whirlpool will have very little difficulty in repaying debt because of their interest coverage ratio, which is so good for the last quarter. How about Ternium? So this is the second one that was kind of highlighted for us. So I had never heard of this company before, so I quickly looked it up, and Ternium is based in Luxembourg. This is important as well for people who are not in the European Union, because if you buy this, for instance, like in my case, I'm buying, if I were to open a position in Ternium, I'm buying a New York Stock Exchange traded stock, but it's an ADR. So down here at the bottom, it says ADR. ADR means American Depository Receipts. So I'm not actually buying the Ternium shares. When I buy it on the New York Stock Exchange, I'm buying American Depository Receipts, and that attracts a little fee. So I just need to be aware of what that fee is and then decide whether this still fits my investment thesis or not. More importantly, let's take a look at the actual company. It is a producer of steel products, and they have a few different operating segments down here. It says Mexico, the southern region, and other markets, etc. Anyway, they make steel. How about its stock price? So currently it's trading at around $34. And once again, as I said a few minutes ago, I'm not sure, I can't remember exactly when I took this snapshot. Actually, I do, because it's right there underneath my little picture. It says 3:48 p.m. Eastern time on June the 22nd. So at around 4 o'clock Eastern time, Ternium was trading at about $34. Much like Whirlpool, there's also a bit of run rate left here because it had a low of $14 52 weeks during the past 52 weeks and a high of 42. So it's about a $10 uptick there just in terms of its 52-week low and high. What about its EPS? It's positive, $7.10. And then the PE ratio, only 4.6. So this is really attractive. So it might be really attractive for the wrong reasons. And that's one of the things that we want to pay attention to, right? So we always need to know exactly why the PE ratio is what it is. In this particular instance, it is 4.6, which means Ternium stock is ridiculously cheap right now based on the PE ratio specifically. How about this? It pays an annualized dividend of $2.10, which currently yields approximately 6% at the current price. So if you're a dividend-focused investor looking to earn some dividends in addition to potential uptick on the stock, then Ternium could be a good bet for you. Conversely, you could say, even if the stock price goes down, as long as they keep paying this $2.10 dividend, that's a really, really cool hedge, because obviously if the stock goes down, then this 6% expressed as a percentage, $2 out of 33 is going to go up, because they work in, it's a binary situation, right? As long as they don't cut the dividend, if the dividend stays the same, the lower the stock price goes, the higher the percentage annual dividend yield is. So if this thing pushes up to 8 or 10% because the stock price decline, that's a really good hedge to have in place on a stock that might be losing money on the top line based on the stock price. The fundamentals, again, just sort of looking at tip ranks, much like Whirlpool, is also neutral at a 6. It's okay by me. The fundamentals, return on equity, 20% positive for the past 12 months, and the asset growth about 6% over the last 12 months. The debt, again, much as I did with Whirlpool, I'm saying here that I can see that the Ternium debt to total capital ratio is 18%, in line with metal and mining industry norm. If we look down here, we can see the quick ratio is well above 1, which as I just mentioned with Whirlpool was 0.92. I want to see it at 1 or above. So in the case of Ternium, it is pretty good. So regardless of the fact that the interest coverage is 2 little dotted lines here, it doesn't matter at all because they have a lot of cash and cash equivalents in the bank. So if I look at the company's balance sheet at the top here, there's a little note that says the balance sheet shows that liquid assets are plentiful enough to service current liabilities in the event that operating earnings are unable to. Then there's this quick slide that I just squeezed in here. And of course, there's no way that you could possibly guess which stock this is that just nudged it way gently up to $30 per share again when no one was looking. So, well, you can probably spot this stock quite easily, right? With its $30 stock price and its 52-week low of $8.50 and a 32-week high of $32.52. And its negative EPS and its market cap of about $28. And the fact that it pays this very lofty 4 cents per year dividend. Yeah, of course, I'm talking about Occidental. You know that. Everybody knows that, right? Because I'm still Mr. Oxy. So anyway, that was Occidental today. So guys, that's a wrap on this one. So these are 2 new stocks that I have not covered before. It's in fact 2 new stocks that I have never looked at before, Whirlpool and Ternium. And maybe what you guys can do is you can tell me sort of what you think of one or either of them or both of them. Does this fit your personal investment thesis? Is this something that might be of interest to you that you want to invest in? Either way, let me know what you think. Of course, I snuck in that last little slide there about Occidental. I do know, because I saw some of the comments that were shared with me, that some people have exited the position on Oxy. Hey, all strength to you. I hope if you do exit any position that you make a ton of money doing so, right? So we don't want to exit and take a loss. If you're in a profit situation and you're uncomfortable, especially if you're uncomfortable with the incredible volatility and the uncertainty that the politicians are heaping upon us, not only in terms of COVID, but also in terms of taxation and potential warmongering and all kinds of things, right? If all those things worry you and distress you and you're in a profit situation, plug in some stops just to protect your gains. If you do, then at least you know that you've secured some kind of a mitigation against risk in terms of losing the paper profits that you're sitting on. And if it sells, it sells. Take the profit. What the heck? Who cares? And if you do that and you don't just exit the position, but you plug in a stop or trailing stop or something like that, your upside is unlimited. Your upside potential is always unlimited. And your downside is limited only based on the original amount of capital that you deployed in terms of opening the position. If you put $100 into a stock, so if you buy $100 worth of Occidental, the most money you can lose is $100. And if your stock that you bought for $100 is trading at $150 or $200 or whatever, and you plug in a stop or trailing stop or something like that to protect your gain, that's totally okay. If it sells, so what? Right? Take the profit. No one ever goes broke taking profit. On the other hand, if you put $100 into Occidental, as I just said, your loss is capped at $100, but your upside is unlimited. I mean, that stock could go to, or your position could go to $1,000 or $5,000, kind of like Bitcoin did, right? Your upside is unlimited, but protect your profit. If you are in a profit situation, don't just enjoy the paper profit and say, like, this is great, I'm just keeping it, everything is good, right? Manage your money, because if you don't manage your money, nobody will, and nobody will take care of you, especially not your favorite politician. So, guys, on that happy note, this is Mr. Oxy saying thanks for watching. Bye bye.